So wages, important, because I mean that is sort of the missing link, right, which will allow the BOJ to start exiting and normalizing. Where are we on that front? Shunto's come and gone. Now Rengo, which is the largest umbrella trade confederation here in Japan, they're asking for, say, plus 5%. Is that going to do it?
Well, that's part of what will do it, but the key thing for wages is that the labor market shortage has got extraordinarily serious, not just for big firms, but even more for small firms, for part-timers. About still 40% of the labor force is part-timers, people near minimum wage. The labor market in that area is extremely tight, and those wages are going up faster than wages elsewhere. The key series to look at, I think, now is what they call the continuous sample, or the common sample wage numbers that the Ministry of Health and Welfare put out. They'll come out the next week. Those were kind of bumping around at about between 0.5% and 1% for a long time. Over the last year or so, they've just gone based on a very nice trend upward. We're now at about 2% on that, and if that continues to accelerate, that will give us a better reading that indeed wages are on an upward path.
But Robbie, here's the thing. You mentioned an interesting statistic. The structure of Japan's labor force has been for, I think, quite a few years already. Full 40% of the workforce are full-time, part-time workers, the guys who work in, say, 7-Eleven. And you've been telling me offline before we started that is where the labor shortage is probably the most acute, and therefore these are the guys that are getting the biggest pay jumps or pay raises, right? But I mean, these guys would tend to be closer to the bottom of the economic pyramid. Even if they do get more money, are they going to go out and say pay this month's rent, or are they going to go out and spend it and help consumption and help growth?
Well, there'll be some of both, but it's much easier for people to buy the food they need or to move up just a little bit, move from chicken to beef, if their wages are going up just a little bit more. And paying for gasoline, paying for other necessities is much easier if you have just that little bit extra at the bottom.
So I've got to ask you, you're saying no move, which means likely the Japanese yen could continue depreciating, right? Is that going to trigger MUFG, Ministry of Finance intervention again?
Well, we're not sure whether it was really intervention last night. The screen looked like they might have done something, but we'll see when the numbers come out on that. I think it's been very interesting that since the big MUFG moves a couple weeks ago, we've really seen the yen just solid at 150. And some news has come out saying it might move, or would suggest that it should have weakened, but it didn't. So I think the market has kind of looked at where the yen dollar is right now and said, well, maybe we've kind of had enough of this. Maybe the BOJ is about to normalize or begin normalizing policy, so let's not take this too much further. And from my point of view, as a consumer living in Japan now for 35 years, when I look at the yen at 150, this makes no sense to me whatsoever. My foreign friends who come visit Japan, they're saying this is the best deal we've ever gotten. So it's kind of like maybe 10, 15 years ago, we could travel to around the world at 80 yen per dollar. That was great.
Exactly.
And they're feeling the same thing at 150. It's too far.